There we go.
Good afternoon or good morning, depending on where you're located. Thank you, everybody, for joining. We'll just get started in a moment while we let everyone else filter in. Okay, I think it's reasonable to get started. Thank you, everyone, for joining us today. We're excited to talk to you a little bit about the mobile myth, really demystifying consumer preference on mobile apps and how they engage with you in general. So we're excited to share some of our findings, some of the research that we've done, and are really appreciative of ACUMA for the partnership. So before we get started, I wanted to hand it over to Krista to share any, specific ACUMA updates or feedback.
Awesome. Well, thank you, Jessica, and hello, everybody. I'm honored to kick off this webinar with our friends over at Cloudvirga. Thank you all for joining us today. As an ACUMA affiliate member, we appreciate Cloudvirga's commitment to educating credit unions. Stay tuned for great insight from Cloudvirga as they explore how credit unions can focus on meeting members where they are digitally and supporting their financial journey every step of the way. Also, from the ACUMA side of things, keep an eye out on our website and our LinkedIn social media for all the happenings that we have going on. I can't believe that the year is half over already, and we are gearing up for our annual conference, the Make Your Mark Annual Conference, coming up in Denver in September. Cloudvirga is one of our amazing exhibitors, so be sure to stop by their booth in Denver. And they also are providing a demo at our digital mortgage showcase in the exhibit hall. So it'll be great to see you guys there. And if you can't make it to Denver, we do host a variety of webinars like this, podcasts, and network meetings, including our upcoming volume-based and underwriting network meetings. So lots going on over here at ACUMA, and definitely reach out if you all have any questions. Jessica, it's been a pleasure working with you and your team at Cloudvirga, and I look forward to today's webinar. Thank you guys so much.
Thank you, Krista. Appreciate the introduction. So we'll go ahead and dive right in. I first want to introduce my fellow panelists. We have Chris Sayer, Christine Stern, who are both senior product managers with the organization. And we have Carissa Orozco, who's our head of sales. So they'll be helping us dive into this topic. Carissa will be moderating the panel. Chris, Christine, and I will be providing insights and talking through some of the details on, consumer preference and what the data really says. So with that, I'll hand it over to the team to get started.
Thanks for that, Jessica. Hello, everyone. Thanks for logging on here. So of our team, I'd say we're all pretty much of the same generation. And the data suggests actually that our age group doesn't have a high percentage of long-term users for mobile apps. So thinking about yourselves, I'll put this to the team. What type of product or service would you download an app for?
Yeah, so I think that's a super interesting question for all of us. But we got this poll up here. I think we can actually launch it to where you guys can give us some of your thoughts on how long you think it is that apps actually stay on the average consumer's phone. So you should be seeing the poll come through here. Let's see. 30 days is the majority. Yeah. Oh, switching it up. Yeah, exactly. Thanks for answering that. Y'all are kind of directionally accurate here. That's what I thought before we dug into the data as well. But going through it, it's actually 75% of apps are abandoned within the first 24 hours. So 3/4 of all apps downloaded to a phone, someone probably immediately decides it actually doesn't need to stay and take up real estate on their phone, which is kind of staggering. And then beyond that, 95% are gone within 3 months. So that leaves a very small percentage that's actually got staying power to be, kind of living with somebody on their phone and taking up, maybe mental capital every day. And that was shocking to me a little bit. So I was kind of thinking about what stays on my phone? What do I keep on my phone? And it's all things that actually require some kind of real-time interaction or data coming back and forth that matters like in the moment. So, it's a lot of like messaging apps, things like, your basic text messaging. There's, your instant messenger with work or with personal friends, and like social media apps that you can keep updated and communicate through, or food delivery, that kind of stuff. But anything else really that I interact with digitally, I call it a big screen task. So things like bigger purchases, or, like comparing different like pieces of furniture if you're shopping for a piece of furniture, or certainly a home. Items that take like actually looking at comparing this to that, or it's just a lot of detail. I always like default to the computer for that. And one that I found kind of funny is shopping for flights. It's pretty common for people to do that on the big screen, but for me, it's not, because it's not an app on my phone. I have the app on my phone to use. You get your mobile boarding pass to go through security and get on the plane. And I know that it has the option to buy flights, but it's still, to me, very much, you got to sit down. I want to compare times and prices and airlines, and it's just too much to actually do on the mobile phone. So even with the option, it's not something I go to the app for. It's certainly something I would bypass that option and go to the big screen for.
And I agree with you, Christine. I consider myself rather conservative whenever it comes to installing apps on my phone. I don't like a lot of unnecessary noise obstructing my view on what I consider the most important features of my mobile device. And that, of course, is my background picture Fluffy battling the middle mini blinds. We can all feel like that from time to time, right? Caught up in the chaos of technology and all of its advancements. But suffice it to say, I download applications with discretion, and all of my applications have a distinct purpose. As for the ones I deem valuable and I can't live without, I combine them into folders by tasks, from fun tasks all the way to not so fun tasks, from my geek out apps to my grown up apps. And while most of my geek out apps are prone to stay, the only adulting apps that gain this privilege are the ones that exercise versatility at its core, kind of like a Swiss Army knife of applications. And that's because the more limitations on what I can accomplish with these apps, the more likely I'm going to delete it after I fulfill my immediate need. There's little use for it afterwards, and of course, the more garbage I have on my phone, the more blocking of my peripheral view of Fluffy.
Yeah, we definitely don't want to block Fluffy. It's such a cute picture. Yeah, I agree with both your point of views. I definitely can understand and relate to the big screen and little screen, purchases. I'd say things like, grocery store orders, Amazon Prime. That is definitely a little screen task, but yeah, purchasing flights, absolutely, that is big screen. And I think that's also, you mentioned something about being able to, price compare and look at different things. I think if you have more to do in those fields, you want the bigger screen, so you have the bigger viewpoint, right? But so, okay, so how does this play out by other generations? If we're talking about our own here, how do you think this plays out across all generations? Which brings us to another poll.
Yeah, I think that's a great question, Carissa. And I think actual sentiment by generation may surprise everybody. So for our audience, can you give me your thoughts on a ballpark percentage that you believe the likelihood of each generation would be to use it in a mobile app to apply for a mortgage?
Interesting responses coming through.
Yeah, they're still coming in. So yeah, and they're spread across the board. 10% for baby boomers, 38% for Gen X, 29 for millennials, and 24 for Gen Z. Now let's see what the industry data actually displays. So, excuse me. So, looking at the generational preferences, people are pretty spot on. About 12% of baby boomers use a mobile device, use a mobile app to apply for a mortgage. It increases with Gen X, of course, but really Gen X is the front of technology, so that's not surprising. Millennials is still under 51%, and that is shocking considering the fact that as millennials, we've all, technology has been at our core. But again, millennials like the versatility. And really, whenever you apply for a mortgage, you're just really doing one major thing, and you're not really going to use the app after that. But then whenever I look at Gen Z is even lower. Gen Z is kind of corresponds with even lower than baby boomers, coming in at 6%. But I think that it's because Gen Z is really coming into the market. Based upon projections from MBA, they suggest that Gen Z will actually be 25% of the first-time home buyers by 2028.
Yeah, and that's super interesting to look at, like, what is happening in home purchases and compare it to what loan officers are telling us they're focusing on. So you see that over there on the right is telling us that only 33% of the purchases right now are from first-time home buyers. But what loan officers are telling us, you can see here at the top, it's kind of an overwhelming majority are focused on first-time home buyers. But what we know from who's purchasing homes is that that's only a third of the market right now. So really, a lot of the market is repeat buyers that are, average age of 61 purchasing homes. So the focus of loan officers on those first-time home buyers, overwhelmingly so, isn't really matching like the conventional wisdom of following what's happening in the market right now. So it's kind of a shift here that doesn't seem to be recognized quite yet from loan officer focus.
Yeah, and interestingly enough, we're focused on consumers here, and we're talking about the consumer data, but a lot of, our industry has spent a lot of time building apps for, in theory, loan officers. Well, the average LO is over 50. So is their preference really that different when they're the loan officer versus when they're the consumer? Probably not. So, I think the interesting point is the cohorts of people that would be in the mortgage buying cycle have a very limited preference for mobile apps. The data tells us that less than half of home buyers used the mobile app in their last purchase. So it's a substantial investment that a lot of lenders have made, a lot of companies have made for potentially very little payoff. And certainly from a loan officer perspective, they fall within a generational cohort that isn't using apps all that much either. So it's a very interesting paradigm when we think about actual usage and who these things are designed for and in what context.
So we've established our own preferences, right, as members of this large generational base, and we've looked at some data points which are very interesting and suggest that maybe the juice wasn't entirely worth the squeeze, right? So putting the question to the team again, why do you think mortgage apps have become so commonplace when it seems like maybe no one really wanted them for that purpose? Chris, I think you're muted.
I'm talking to myself. It was a good conversation. So I kind of liken it to the phrase that we've all heard before. What can we do to keep up with the Joneses? Many lenders are looking for what keeps them competitive among all of their peers. Like what is the next hot tech solution on the market? And when you get enough industry leaders following the same path, citing the same material, it becomes a staple point of entry to any market. For example, entry-level positions didn't always require a 4-year degree with 2 years worth of experience. Entry-level meant the beginning of a point of one's career. On-site training came with the job, and that's how our star employees were molded. But during the late 80s and 90s, when access to education was expanded and affordable, the prerequisite to any entry-level position in almost every industry became, do you have a 4-year degree? And do you have 2 years worth of experience? Now, this didn't necessarily mitigate the need for on-site training. And as we know today, a 4-year degree and 2 years worth of experience doesn't necessarily provide a company with a competitive advantage in the HR department. But because that prerequisite was widely adopted as industry standard, it's what hiring employees currently seek. And unfortunately, it's not a great metric to base what an employee is capable of.
Yeah, exactly. There was certainly the sentiment of everybody else has one, so we need an app to make sure that we're still relevant. But I think that there's also the concept of, like if you're measuring the wrong data points or focusing in on the wrong KPIs, the data can tell you you need one, but you're not actually measuring the right thing. I know I've been guilty of it before of, building something and being so excited that it's just being used at all. Has it been downloaded? Who's on it? How many users do we have? Just that very first piece of engagement was paramount, like that was the exciting piece. But as we've seen in this data here, like it's not measuring what you want, right? So someone will download your app, they might not keep it, they're likely to not keep it for 24 hours. So measuring the actual actions that you're wanting to take with the consumer, or like views or whatever it is you're trying to drive behaviorally, is harder to do than just measure, like, do they have it? So I get the difficulty thing there, but it's really important to make sure if you're building an app, you're measuring for the activity you want to be happening. What does engagement look like? Do you want them to come back to your app every day, every week, every month? And what do you want them to be doing? Just view information, take some kind of action. But you've got to like really hone in on what it is you're measuring if you're making a decision to the undertaking of building an app. But as you guys can see this question here, it's something we think about, a lot, and we're interested in what everyone else thinks. But if you've built an app or even just thought about building an app, what were your reasons for doing so? We'll give y'all a second to kind of tell us. And this can be any type of app, financial or otherwise.
So yeah, let's everybody take a moment to go ahead and enter your response. This is really just free form. We're interested to know what the audience thinks. So let's continue the conversation though. So how do we know for sure that apps may not be the right investment?
Well, the data's really out there if you're looking for it. The reality is most consumers are downloading fewer than 20 apps on their phone. There's kind of a 3.5% year-over-year decline in app downloads. We've also already sort of talked about how quickly users will abandon them. So when we think about app investment against how consumers are really using apps and what they're using them for, you can see that the primary uses for apps are almost what Christine described at the beginning. It's like the things I need to go back daily for, the things that I need real-time update for. And for a lot of people, that's more social and that's more messaging than it is, transactional. So when we think about apps and investment, you want to be focusing app development or, native app first development on areas where a consumer actually is going to use it for that purpose, right? I mean, if you look at these numbers here, when you think about the space that we operate, you see that, business and finance and some of those other type of functions are much lower in the usage rate across all generations, which the sentiment data sort of told us that as well. But there is kind of a clear difference in expectation when consumers really want to use a native app and what they're going to use it for. So, if you're a credit union offering a lot of different product lines to your member, there's a lot of regular communication, collaboration, and engagement, it makes sense. But in a sort of single-threaded transaction that ultimately doesn't have a daily connection and doesn't have a long-term use, it's not so valuable. I mean, when you think about even in the servicing arena from a mortgage perspective, most people are on ACH. So if I'm on ACH, when am I really connecting with you? It's going to be at tax time, or there's going to be some sort of problem, like, a loss mit, which I probably don't want to do through an app, or my loan's been service released to somebody else and I'm trying to figure out what's going on. But for the most part, there's not a huge ongoing interaction. It makes a lot of sense when you're talking about, your bank account and you want to get quick updates, but even then, like in the big screen, little screen context, the reality is that consumers do not view apps as all that secure. So when they're looking for real, like, financial information, real high stakes, high complexity type of information, they're going to reach primarily for that mobile engagement through a website as opposed to an app. So think about it in that context. What are you really interacting with your members on? And would they want to leverage those type of tools for that type of interaction? There's data out there that suggests as much as 60% of even like, shopping type transactions start maybe on an app and end on an actual website. So people will use it for scanning, people will use it for quick info, but when it really comes down to like doing the actual transaction, consumers will often go back to the physical website.
Yeah, so it looks like even from some of our responses here that range from, competitor advantage, making the mortgage payments, even LO recruiting, it seems that it's maybe even more on the back end of the mortgage process rather than the origination piece. So from the data that you have collected here, obviously you guys have done a lot of research on this. What do we think the borrowers really want then?
Yeah, I'll tell you what they want. They want software that's simplified, that's user intuitive, that's frictionless and transparent.
Yeah, and then the obvious, I mean, they definitely want to be told what's relevant when it's relevant. So, timely updates of relevant information.
Yes, and the big topic really is personalization. And believe it or not, consumers do not define a mobile app as personalization. But, some interesting data from Boston Consulting Group, who's done a fair amount of research in this space. Consumer loyalty is really up for grabs, and there's an opportunity to capture and recapture your existing member base just through true personalization, right? Consumers sort of expect it. A large portion of them are frustrated when they don't receive it, and when it's missing, that could be, simple things like, you have my information, why do you not know who I am? But the definition of personalization really goes quite a bit deeper. And I think if you can hit all of these points, there's definitely an opportunity to, I think, expand your relationship and deepen it with your members in a way that I think meets the need without, some of this additional investment in technology that maybe they don't want.
So, well, let's expand on that. The concept of personalization. I think that is definitely one topic that seems to be growing, especially in our industry. It's definitely a trend. So let's put this to the audience. What do you think personalization means? What does that mean to you, especially, in the tech space?
I love this question because we're asking, it could be a different answer for everyone. What is personalization is quite personal. See. Yeah, okay, very heavily weighted here. I like it. Yeah, this is awesome. And then the data we found on this, I find super interesting for like some of the things are almost to me considered table stakes. Essentially, like the top one here, it's just make it easy to use. This is such an interesting concept for personalization because it's like make it to where I know where to click and where I click and what happens after I click makes sense to me. And I feel like I have control and kind of agency over what it is that I'm viewing. If it feels like I can't click intuitively, I don't know where the data is hidden, there's 3 layers deep to get to what I'm trying to see, you start to just not trust that you're receiving the right information, maybe not even at the fault of, that they're not giving you the right information, but if it's user error because it requires a manual for me to use your application, then I'm out. I don't know how to work it. I don't want to learn how to work it. Make this easy for me. We've seen it done well, so make sure that's happening. There's also, buried a little bit in the middle here, celebrating milestones. I found that one interesting because that can be big or small, right? But like, hold my hand through the process and the point that I'm at. So tell me where I'm at on whatever process it is that we're engaging on. If I'm getting a mortgage, that's, a hefty life choice. It's a big moment. I need to know if they're waiting on me to sign something or if the appraisal's been ordered, whatever it is, like tell me where I'm at in the process. But I also care sometimes equally as much about if I have enough points rewards points to get free guac with my next burrito at my favorite burrito place. So if there's anything like that we're tracking through a process or kind of like hitting milestones together, that's something that I care about in real time. And that feels like something that, is personal to me. It's nobody else is at that point in the process. That's where I'm at with you in this process. So that's another one to me that's like super, it's almost become table stakes as well. But
Mhm.
a lot of these center around the concept of what I call like, okay, we've grown accustomed to and we're pretty comfortable with at this point as a society that you company have a lot of data on me. Whether it's data you had before we started interacting or, certainly since we've started interacting, you can tell, based on inputs I'm giving you or information you're explicitly asking for, things about me. So you should be using that data. It's expected that you're going to use that data to interact with me in a personalized way. So give me information when I want the information and give me information that I actually care about, whether that's, specific messages or, there's a sale happening now or these specific products that you think I'm going to be interested in. If you've got all this information on me, especially information that you have collected on me because I've been interacting with you being company or website, whatever it is, make sure you're using that in a way that's meaningful to me. And that's what's going to make that personal experience.
Yeah, we can see by the responses here, it's personalization is much more than just remembering, a user's name, profile picture, a few people have responded to that. So it's much more than that and, your color scheme or what have you. So last question I'm going to put to the team here. In terms of personalization and really tailoring the experience based on data and behavior, as you were talking about, Christine, how did this concept of personalization play into how you're thinking about consumer-centric products going forward?
Well, I think it goes back to my original point of discussion. Consumers value products that host versatility at its core. It's not necessarily a one size fits all. When it comes to lending platforms, it's important that they can expand across multiple channels, that they are product agnostic, and that they attract customers for life. These types of products can do all of the things that a financial consumer desires, and it can be done from one centralized location. And I think that's what we've done with Tropos. We've embedded consumer online behavior and loan product versatility into our product development regimen.
Yeah, and Chris and I are on a team building, it's a process that's, data heavy and it's very personal data. So we're collecting, information on someone as they're going through a mortgage application process, right? So there's a lot of sensitive and very important data there. So we want to make sure, again, that we're using that in a way that helps kind of guide the user through the process in a way that makes sense. We have, again, like it kind of goes back to what we talked about with what's personalization. As we collect data, we want to make sure we're using that to either handhold them through the process in a way that feels comfortable to them, or in the future maybe offer them a product that we know they might be needing at that point or would likely qualify for. So it's just making sure all that data behind the scenes is connected and presented back to them in a way that's meaningful.
Yeah, I mean, I think at Cloudvirga, what we're really trying to do is be customer first and really think about the customer and the member as the core of all of the work that we do, because at the end of the day, they're the most important part of the process. If there's no consumer, there's no lending, there's no product to sell or pitch or no a relationship to have. So the data that we've shown you here is the kind of data that we leverage when we're thinking about what our roadmap is, what our product structure looks like, what our trajectory looks like, and what we're building, where we're focusing, and really making sure that what we're doing is pragmatic in the sense that there is an audience for it, right? We want to make sure that the things that we do, the things that we provide to you as lenders and partners is resonant with the people you want it to resonate with, right? I mean, I think that's sort of the key. So when we thought about the consumer and the research that we did and sort of this expectation of personalization, I think the thing to consider is that from a consumer perspective, which we all are, and sometimes we forget about that when we think about things in the context of our industry and what we do all day, right? But at the end of the day, this idea of personalization, I don't make a distinction as a consumer between an industry. Like if I get a level of personalization from Starbucks, I'm expecting it from my bank too, right? I'm expecting it from my credit union, which I get. And that applies regardless whether we're talking about utilities, a mortgage, a credit card, a retail shop I have a rewards account with. At the end of the day, I think the expectation is always that I have an engagement with you, that you as the, entity that I'm choosing to do my business with recognizes me as an individual and a person, and that the solution that you're providing me to engage with you is accounting for all of those things. So, as the team talked about Tropos, our focus there really was thinking about things from a personalized perspective. So relevant recommendations, easy to navigate, thinking about things in sort of a guided flow, guided help perspective. At the end of the day, the customer has no idea what the nuances are of an application, of a compliance requirement, what's required and when. And so making sure that that's very crisp, clear, easy to follow, no guesswork. When we think about, lenders, credit unions, banks, other partners that have multitudes of products, well, think about relevant product and service recommendations in that respect, right? Like just like you have an auto loan that might tell you, hey, you could refinance. Hey, seems like your warranty might be expiring. Or if you take that even broadly in some of the things, around behavioral banking, thinking about, hey, based on where you're at in your life situation, it might be time to think about a student, investment account for your kids. Or, hey, you've just paid off your car. Are you thinking about a new one? There's lots of different things within your life that happen. Because when we think about ourselves as a customer, there is a lifetime of lending, right? So we need to make sure that the solutions that we're building and that we're putting in the market and that lenders like yourselves are leveraging are thinking about it in that context and thinking about the customer holistically. So let's do the 101 stuff right. And that was really the, edict I gave the team as we started thinking about this is how do we do the things that people expect correctly and well over introducing a substantial amount of, potential technology that they may be resistant to or may not be applied in the right context. So really focusing on what consumers want, what does the data tell us they want that might be different than what our bias suggests they want, and then really focusing on doing the things that they say they want really well. So as Krista mentioned at the top, we'll be at ACUMA, we'll be demoing our Tropos platform and expanding a little bit on the conversations that we've had today, the data points we've shared, and show you how that's manifested into what we've built. But we wanted to be able to share with our, ACUMA compatriots some interesting insights because it may be controversial to say that maybe people don't want a mobile app, but the data really suggests that maybe they actually don't. And what do they want instead? And really opening up that dialogue with you guys. So I think at this point, Carissa, we're probably ready to open up for any Q&A that the team might have. And share that insight if we have it.
Yeah, absolutely. So we welcome the Q&A right now. So if you guys want to ask any questions about this topic or even the Tropos product, we're open to that. I do see a message here. One question is, do you have data on member engagement or completion rates between native apps and web portals? That's a very interesting question.
Yeah, so I mean, we've talked about it a little bit in this conversation, but in terms of like actual, if we think about it in the context of a mortgage, less than 50% of consumers are even using an app in the first place. When we think about servicing apps, the numbers like less than 30%, because again, at that point, it's just an ongoing babysitting transaction. And when we think about just customer behavior in general, like I mentioned, roughly 60% of the traffic ends up in the web portal to complete the process. So I think when we think about mobile apps engagement and sort of completion percentage or rates, the paradigm is slightly different in what we might define that as and what a consumer might define that as, because quite frankly, they finish most of the complicated transactions on a web portal. So when you think about an app, it's most likely, how do I get quick information? How do I get quick alerts? how do I, potentially do a quick analysis of a status, but when it comes to actual transactions, they're primarily doing those on a web portal.
Thank you. Another question here is so this is from obviously looks like a credit union. If we already have a mobile banking app, should we integrate mortgage into it or keep it separate as a web experience?
I think there's something to be said for integrating some level of status update or push notification or alert, just for the sake of consolidating an experience and offering that. But at the end of the day, no one wants to fill out a mortgage application on a mobile app. Whereas if you think about the real estate, you can fit 3 times as much information on a website than you can a native app. And when you think about how complex an application actually is, we're talking, 40 screens potentially, depending on what the context is. The same is probably true for loss mit. I mean, I think there's more opportunity in the loss mit space because that is a little bit more of an emotional experience. And a lot of times people have to get comfortable with the idea of kind of talking to somebody about the issues they're dealing with. But even still, that's probably not an app that's more website centric. So I think if you have an app, the value play is really in status updates and stuff that I can kind of quickly digest over the actual holistic process. I think, doc upload, there's some opportunity for, that process within mobile apps, especially if you've already made the larger investment. But again, if consumer sentiment is really, about some level of security in the type of transaction, and there's a view that like that full website may be more valuable, I think an idea that I would leverage is actually trying to survey your customers. I mean, when we started this process, we did that. We actually did real surveys to real people to better understand their expectations, and that might be something I would consider if that was going to be a substantial investment for you, is really to kind of reach out to your members and say, hey, is this something that you would be interested in? What would you want to see? Would you want to be able to do the whole process and really sort of take their lead on it?
So to kind of follow up with that, we have another question here. Is asking, do you think consumers expect their mortgage application to pre-fill based on the financial institution's information they have in their core?
I love that question. I think yes, to an extent. It kind of goes back to, if you have data on me, can you use it already? So it's something we certainly talk about. We've got a system that can take in information on multiple types of loans. So we definitely want to, if you've done a mortgage with us, be able to apply that to your auto loan that you apply for as well. There's also the, kind of tied to this is if I'm giving you documents, can you take data off of documents and fill out my, application for me? I think a lot of consumers and honestly loan officers and people all throughout this process on all sides of it feel like there's a lot of repetitive information being asked for and given and in multiple forms, and can you confirm and all that kind of stuff. I need an updated one. So it goes back to the process of using the data you already have, which can be tough in the mortgage process because there's a lot of checks that are mandatory and stuff like that. But I do think we're getting to a point where we're expected to use information once it's already been provided from a consumer. So I don't want to open a can of worms, but it kind of gets into, when we talk about scraping data from documents and stuff like that, a little bit into the AI space, but that's kind of the extent of where we see that being useful so far. So that's an interesting one. It's something that Chris and I talk about a lot. That's kind of our pet project, is wanting to get to give us documents and we'll take it from there. Tell us about your financial position and we'll tell you what your options are to qualify for, what we think you should best pursue. So I think we are on the beginning of that being something that consumers do expect.
I see one more question here. How do you handle borrower authentication and trust on a mobile web experience, especially without an app store presence?
Well, I think, there are a few ways you can think about it. So, if you already have a web experience, and we were just talking about extending it, there are things you can do in sort of an SSO space. There are also things that you can sort of do and leverage within sort of a browser's standard security settings. You know, like if you were on your phone, you can create a passkey. You can do that on Apple devices that aren't your phone. So if I'm on a MacBook, I can create passkeys that's natively part of Apple functionality that connects and works with whatever website that I'm on, if they have built it to work that way. There's also, you know, certainly MFA. MFA is kind of a thing that sort of consistently expands in terms of what that means. But the idea that you have a customer create you know, a password that's like industry standard or above industry standard in terms of security requirements. Don't let them create bogus passwords that can easily be hacked. But you kind of have that standard password, that standard account creation, validating their identity, and then sort of a second tier of MFA, which could be, okay, when you log in, I need to send you a passcode, and I'm either going to do that to your, you know, email, or I'm going to do that to your phone number on file, or I'm going to call you, whichever preference that you set. But sort of having those two tiers of authentication are typically where most people are at. But the sort of native concept of passkey or biometrics can be integrated with websites. It doesn't just have to be natively on your phone. If you have, you know, Samsung, Apple, you know, the major players in the space, a lot of that security actually translates to physical sites as well.
So I definitely want to ask this question to the team, although I think it's going to, it's a pretty open-ended question, and I know we have a lot of thoughts and opinions, so if we can, you know, scale down the answer. But for people who are on Encompass specifically and using Consumer Connect, how is our product different than theirs?
I think that goes back to versatility. That is what the market wants right now, is versatility. Encompass is very rigid. Although it's flexible in many ways, there's still a lot that you can't do. And then whenever you do change the platform or do customization to the platform, it requires a lot of effort. It's not easily mandible as what we're doing with Tropos, where we are building versatility and flexibility into the platform as we're building it out. And we're also taking, you know, the things that software companies that have been around for a while, like Encompass, and they have not done it well. We are taking that upon ourselves to say, hey, how can we make this experience better? How can we make it easier? So that is a very loaded question, but I'm glad that you asked it.
Yeah, and I would just add, because it looks like someone else has asked the same thing. The one thing I want to make sure that we do cover is we've talked a little bit about the mortgage space, but our product is product agnostic. So it is not a mortgage only solution. So Encompass Consumer Connect obviously is. Mortgage Cadence would be. It's in the name. So what we've contemplated is the reality that, you know, credit unions and banks really aren't just mortgage lenders or servicers, right? It's much more far-reaching than that. And for most credit unions, part of the value proposition with your members is that you can sort of follow them throughout their life, right? They're a member, they're a shareholder, they're an owner of the experience. And so you have a multitude of solutions that you can offer them throughout their life cycle. And depending on who you are, that experience can feel very different product to product. You might have different LOSs, you might have different resources or divisions doing different products. And sometimes that manifests in how the consumer is experiencing their engagement with you. It feels very different and bifurcated. And our solution really works across a multitude of products. It's a centralizing of your brand and your experience with your consumer, regardless of context. So they're always coming back to the same type of experience. You know, there's a lot within our infrastructure and the overlay of how we've built this that's very dynamic. So when we talk about, you know, customization, flexibility, some of the things that are transparent to your member, but very clear to you, is the complexity in managing all of these different products, the different rules, the different expectations, maybe even the different brand personas you might have, depending on how far and how wide you've actually branded your products and how those things are different. And our solution allows you to manage that. So you own and control how the application flows, how the process works, how you say it, how you ask it, what kind of responses you get, what order those things happen in. Even down to things like, well, if their credit's under a certain amount, we don't want to ask them for automated verifications, or for this type of product, we're not doing that. Or for this type of scenario, we want to immediately fire off a request for a document. All of that stuff is sort of natively out of the box in how the solution is built. So as a lender, you have real control over how your brand is presented to your members and how that process actually works, depending on your context or your needs. So it's not a one size fits all solution. It's we recognize that you're different and your needs are different and your members are different and the products are different. The context is different, right? You wouldn't take a customer through the same process in the same context in the same language if they're originating versus applying for loss mit, right? If they're submitting an RMA versus a 1003, I mean, that's a different experience. So that's really what I think the differentiator is, as opposed to just saying, yeah, there's native differences in how some of these other players work in the mortgage space. It's bigger than that. The vision is bigger than that. It really expands beyond a single product. It's product agnostic, meaning our application is separated from the concept of integrations. So you could feasibly use this platform and send auto loans in this direction, mortgages in that direction, credit cards in another direction, because all of our integrations are abstracted from the solution. So there's not this level of kind of like costly implementation when you want to change something, or having to build a completely new construct because I have, a different backend system for one solution versus the other. So I think that's really the key. So when we say a single question, a big idea, our single question was, what do borrowers really want? What if we put the power of lending in their hands? And I think reasonably every consumer would expect that if I'm dealing with one company, that experience with that one company is pretty much always consistent. The colors could be different, the person I'm talking to could be different, the language could be different, but the process, the engagement, the level at which you communicate to me what that looks like, how that feels, should be consistent.
Well, thank you for that. And I don't see any other questions coming in, so I think it's about time to wrap up here. So thank you again to Jessica and team. Also, thank you to Krista and ACUMA for sponsoring this, for partnering with us. And if any of our audience would like more information on us or our products, please reach out to me. My information is there on the screen. Feel free to call, text, email, whatever you feel comfortable with. And of course, check out our website for more information, to request demos. This next gen, product that we're talking about here, with all of the data and research backed into it, has just been really, really exciting to watch and see come to fruition. So I thank everyone for their time and participation today, and hope everyone has a great rest of your week.
Yep. One last shameless plug. We're going, for those of you guys that attended, we'll publish an ebook with more research, more insights, more sources, so that you can leverage this detail, in your day-to-day business as well. If you're in the process of making any sort of decisions about consumer engagement. So we'll be publishing that relatively soon, and you guys will get first pass. So be looking for that from us. It should be coming imminently. So appreciate your time, as Carissa said, and thank you guys for taking an hour out of your day to sit here and chat with us and hear more about how to really take your member experience to the next level. Thank you, guys.
Thanks, everyone.
Thank you.
Thanks, everybody.